Hi there, and welcome to the Money Effect, where I bring you all news, money, and finance related. Just a quick disclaimer: this is not financial advice, and just for strictly for educational entertainment purposes. So, if you like this content at the end of the video or right now, subscribe and like. And yeah, now that's out the way, let's go. So, what's been going on in the markets this week? Well, we know that everything's down, everything's been going down, inflation has been rampant, and central banks from the Bank of England to the European Bank to the Federal Reserve Bank in America, they've all been increasing interest rates. Obviously, not good. Interest rates goes up, you pay more for your mortgages, you pay more for your credit cards, less disposable income, which then at the same time, if inflation is still going up, you've things are more expensive, so it's not good. This week, we've had a good rally in the financial markets, and why we had a good rally in the financial markets because we're getting big from America anyway. We're getting big employment numbers, and when America has big employment numbers, that means people are thinking we're not going to get a recession because now the talk is now like, yes, we know we've got inflation. Has inflation peaked? We don't know, but are we headed towards a recession? Obviously, we won't know that. Everybody will look at their own situation and feel like and everybody's going to be different because money is not the same for everybody. But things are more expensive, and just logically, you're buying less. Your bills are going up. You're gonna have less now. One good thing is that there still seems to be a lot of jobs, and obviously in America we had this big employment number. In the UK as well, employment is doing well. You can see there's still a lot of jobs available. Not all rushing us back to the office. Still a lot of work from home jobs. So that's good. So people are still in jobs. People are not losing jobs because once that starts happening, with all everything else that's going on, it's going to be a big issue. So we see here the S&P, gained for its fourth day in a row, longest winning streak this year. So things. Have we reached the bottom? I'll probably say I don't know. I'll probably say no. I still think there's going to be more pain ahead, but it was a good week to show that there are people that's buying, some of these stocks. And if we look at, let's take some of the stocks we look at. We see Apple. I mean, not Apple. Sure, we could do Apple, but we see Google, Alphabet. 5 days, it's had a nice rally, 10% up in the past 5 days because of the fact that you know although the Federal Reserve is going to be on this in hiking and increasing the interest rates, it doesn't seem to be affecting the economy as some people predicted. So, and potentially inflation has peaked as well. We saw a big fall in oil prices this week, which is not reflected at the petrol pump. That's another video, but definitely crude oil is coming down. So I don't know why that it's not happening in the petrol, but you can come to your own conclusions. But potentially, if the Federal Reserve doesn't have to be as aggressive, because they're still going to raise interest rates. The Bank of England is still going to raise interest rates. They're still going higher. It's just how aggressive are they going to be? If inflation is coming down naturally because of the lack of demand, because people have less money to spend and they're buying less, then these policymakers will be like, okay, we don't need to go fully hard. We can still get away with things, and there's going to be a big inflation number next week, so that'll be interesting. But we can see Alphabet, a big company, got good earnings. Everybody knows Alphabet. Use Google, use YouTube, Google right there. This is a company they ain't going bankrupt anytime soon. If we look at where it's come from in the last year, I mean, I'm not saying this thing can't get any lower, but it seems to find a temporary bottom for now. Um, it's better than buying it when it was up here. If we look at the more speculative growth stocks, you can see Draftkings. Maybe an interesting one because if it does go into recession, I'm sure less people would have less to gamble with. Again, last 5 days up 15%. That's a big. And if you look at this company, then this is a more speculative growth company that's actually not earning. So as in, it's not having any net income. So very speculative stock. Again, you have to watch that. If we look at where this company's been, so if we look at where this company's been, so okay, actually, it's not actually that dramatically bad, but you know, it's been hovering around. So I mean, potentially this could get lower, especially because of recession fears. But it's been a good week. We look at a UK company, Associated British Foods, that's known as Primark. Obviously, with one of their subsidiaries is Primark. With inflation, costs are going high. I think Primark is known as good cheap clothes, but at okay quality. They've had to raise their prices, and obviously that had a big effect year to date, you can see how it's literally taking them down, this inflation story. But you know, it wasn't too bad this past week, a little bit down, but you know, have they hit the bottom? If inflation peaks and we don't go, and even if inflation peaks and we do go into recession again, this is, you know, Primark is probably going to benefit. But you know, if we look at where this stock has been, you know, the last 5 years, this is really at its low point. So you know, stocks are really at their low, but we are seeing buyers, we are seeing people coming in, and you know, that's essentially a good thing for the market. I'll just bring up this video quickly. So if we just look here, for example, you know, you can see, you know, what you're looking at. You know, if you see, okay, let's not take all the way back because we might not remember all these instances, but you know, if we look at '07, that was the financial crisis. You know, markets lost 57% on average. That's 17 months it took. You know, and if you were somebody that was either taking a position during this time or afterwards, you know, where we had all that quantity reason, you know, you had a long bull market, 401%. You know, these are the times now. We're in a bear market. I think everybody knows that. You know, so these are the times now you want to be looking at your investments. You want to either start building positions, averaging in monthly, or if you're brave enough to put those big sums and know that you could ride it out for the next few years. But things go in cycle and things will turn positive one day. So now is the time where you really want to be, you know, looking at these companies like I've just shown you that have come down in such good valuation. I'm not saying they're not going to go down further, and they might, but you know, if you're not open to the opportunity, you know, we saw in January, you know, 24%. Obviously, that was sorry, I mean in February, 34%. That was during COVID. You know, just before COVID lockdowns came in around March. You know, obviously then we got a massive stimulus, which is why we're in the inflation issues we are now. But then look how much we went up for, and again now look, 24%, 16 months, 6 months. It's only been half the year, probably a bit more to go. You know, but I'm just saying, you know, look, history has shown that after these bear markets, we're getting big bull markets. So this is the time to be looking into stocks. What's been going on in the crypto market? So the crypto market, obviously, we had some, you know, we've got a lot of stuff about this DeFi stuff now. Celsius, a company that would literally you would lend your crypto to, and then they would now give you a yield on it, 18%. Most people are paying. Obviously, now when crypto falls, people now start rushing and want their crypto back, and this Celsius has lent it to other people and they've leveraged on it, and it just created a mess. So they stopped withdrawals, but obviously this is still an ongoing saga. I think there's some legal ramifications with it, but you can see that they got some crypto back and they've sent it to pay off their debt. So there's something going on with this company. Me personally, I don't know. I think ultimately it's going to fail, and probably um, those few people are just trying to get their money back, and the masses, you know, the everyday person on the street is going to lose out. And you know, crypto is very speculative. You know, Michael Saylor, you know, you can Google him, Michael Strategy, big crypto bull. He done an interview this week, and he was talking about this is the time to remortgage your house and buy crypto. Listen, he's going in, so cool, but I don't feel that's the right advice for people in general. But it's definitely, you know, Bitcoin is at a nice level, and if something you are a believer in crypto and something you always wanted to get interested in, you know, these are the times now to start learning it. And yeah, you see the markets were up this week, and this is why there's some good news for Celsius. He's trying to pay off their debts. Will they recover and people will get their money back from these people that were lending? I doubt it, but you never know. Um, you know, also Ethereum climbed. You know, we're getting this merge. Everybody knows about Ethereum. Ethereum is one of those cryptos that actually got real world uses. Whether those real world uses are good, but you know, we've seen one of them in NFTs and things like that. So it is actually a real world project. The problem with crypto is because it's the network is on. I'm not going to get too technical, but basically, you know, just to send a payment of say £10, you might get charged £4 or £5. Obviously, that's not sustainable. They're doing a merge, they're doing some upgrades to the network so that it will be a lot faster, that when you do send a payment for £10, it will be like, oh, maybe a charge of 30p. You know, and that's now something that can become sustainable in the future, that they can now build on, whether it's metaverse, NFT, to actually get some real world products out. And when is this merge happening? I mean, it's been talked about. It was going to happen this year. Is it going to happen this year? I'm not too sure, but it's definitely there's some more good news about it. And when that merge happens, you're going to see more crypto actually becoming more viable. And hopefully people start coming in. But again, crypto's at a low price. One of the big news is, and people, you might wonder why I'm showing this picture, is because, obviously Boris Johnson, the Prime Minister of the UK, has resigned. Uh, Not only, well, I don't know if he's a caretaker or whatever he is, but Rishi Sunak, who, and it might not be a bad thing, he's a hedge fund manager and obviously somebody that, is embracing this crypto and embracing, these guys just want to make money. He's come from the private industry. So he resigned back on the back of that. And obviously now he was somebody that was definitely very positive. Look, you see, Sunak's position is positive. So he's somebody that in April he described his ambitions to make the UK a global hub for crypto asset technology and asked the Royal Mail to issue an NFT. So this is somebody that Rishi Sunak, whether I like the Conservatives or not, that's your own opinion, but he's definitely somebody that really likes, crypto. And obviously he's resigned now. I mean, he resigned as the Chancellor, which was kind of putting the crypto plans on hold, but I believe he's making a run for the Prime Minister. So if he does become the Prime Minister, which I'm guessing is his plan, great come up. We won't get too political. Great come up for him, but he's definitely somebody that likes crypto. So, you've got, I think there was something about Liz Trust, one of them people that's talking about it as well. Look, Liz Trust saying there's opportunity. So these conservatives, they really, most of them actually do like crypto. So it'll be interesting to see what happens. But if Rishi Sunak does become the Prime Minister, that's going to be a positive for crypto in the UK. And it's going to be a positive in a sense that it can get regulated, because we're seeing with things like Celsius and all these DeFi products that people have been lending their money to or lending their crypto to get these big yields. They're not regulated products. And now we're seeing that, if your bank goes bankrupt, you've got up to 75,000 protection, I think, in one account. These cryptos, there's no such thing. Anybody can set up these, not anybody, but there's ways to get around it and stuff. And regulation that doesn't restrict crypto behavior could actually be a good thing, and it could help give more confidence in the asset, that people would say, okay, I'm comfortable putting my money here because it is regulated. There might be some kind of insurance if it goes bankrupt. So, if we get more people in positions of power, like obviously Sunak, if he does become the Prime Minister, that would be a good thing. And off the back of that, you've seen crypto, Ethereum, sorry, and crypto in general. It's been a good week. Crypto for me always just tends, unless it's specific news, it does tend to always move the same. It's just varying degrees. Obviously, here you can see Bitcoin is probably the biggest and moves less. Things like Solana will move a bit more. So definitely, if I show you, we start another chart. If we look at here, we look at some of the flows, the crypto flows. We can see that this week was a good flow for crypto. And obviously year to date, you can see most of them in red. Bitcoin is not too bad in terms of outflows, but good chart to keep an eye out on, just to see what's been going on and going into crypto. Cool. And then the last one will be next week. We're back to these guys again, the Federal Reserve. Now, it's all going to be on them. We're going to get some inflation numbers, and then we're going to get some earnings, because earnings are going to come out, I think, next week or the week after. That's going to be, I'll do another video on that, company specific earnings, just to give you the general idea. But if these earnings start pricing in recession, we're probably going to see another down leg in stocks, which everything's lagging. So the Fed's interest rates now are not going to have an effect now. They're going to have an effect in 6 to 12 to 18 months. But these Federal Reserve guys, yes, inflation is maybe peaked, so they say, we don't know, but they're not letting up. They're thinking we still want big increases, and we're not playing around with this inflation. And if it gets to the point where they just increase so much that people now start struggling, and then things are already expensive, then that's when recession is now going to be back on the table as opposed to off it again. So that's going to be interesting. Keep an eye on what they say. If we look at what's been going on since the last one, what has happened, recession. Since the last inflation interest rate increase, people don't have no faith in this. And I said from the start of this year, go watch my videos, they were saying that inflation is transitory, it's only temporary. Now what are they saying? And I said it from the start that these people don't know what they're talking about. And unfortunately, that's the way it is. and they're trying to increase interest rates to starve inflation, but they might push us into a recession or stagflation, even worse. But since then, we've seen less consumer demand, obviously, and I think you'll notice in yourself, everybody's talking about how expensive things are now. People are cutting down now. Whether you obviously depends on what your position is. I don't know your position in life, but people, you generally will notice your behavior. I've noticed my behavior, limiting how much I drive, limiting how much I go out. It is having an impact now, and you know this is that's what's going on. Oil prices tanked and lower inflation expectations. So the next meeting, they might be more what we call dovish, so they might not do it as much as possible, and then that's what the kind of market is pricing in right now. That's why the market is going well. But if they decide, nah, fuck this, we're going full throttle, we're still doing what we want to do with everything that's going on here, it's not going to be a good look, and we might now start seeing um, more legs downward. But if they decide that we're at a good point where we think we've done enough, I don't know what's going on in Russia and Ukraine. It looks like to say that's just a standstill. They might decide, let's just settle now and maybe not do it as much, which will be good for the markets. But listen, we're gonna see. But yeah, that's the money effect. Keeping you signed in with this week's news. Yeah, like and subscribe, and peace.